Hello, welcome to Save U.S. Taxes Legally. My goal is to teach as many people how they can save taxes with the Spendthrift Trust. It's legal, it's in the IRS Tax Code 643B. We're going to start off with three simple questions, and you're going to put either yes or no in the chat. First question. Do you want to save federal and state income taxes year after year, generation after generation, and leave a legacy? If you're making at least $100,000 a year, I can guarantee you will save five figures in taxes every single year. Worst case scenario, if your great great grandson in 2095 cancels a trust, he will be responsible for any taxes saved in 2095. Anything saved in 2026, 2027, 2028, 2030, 2045, 2080, all of that will never have to be paid back. Yes or no in the chat. Question number two. What if all lawsuits become frivolous and go away? Do you realize if you are on the Las Vegas Strip, there are over 64 advertisements for lawsuits? If you have an LLC, an S Corp, or a C Corp, 40% of them get sued every year. Anyone can go online to the Secretary of State or the Corporation Commission of your state and research the LLC, S Corp, or C Corp, either by your name or by the name of the LLC. The Spendthrift Trust is on the federal level. It does not hold any LLCs, S Corps, or C Corps because that's on the state level. We highly suggest you shut them down. If you do get sued, all your assets are in a titanium vault and no one can get a hold of it. Any judgments can come against you. And number three, what if no one knows what you own, where you own it, how much you own, or what you do with it? This is the power of the Spendthrift Trust. Now, Paul Benson was a Harvard Law professor who wrote 5 separate trusts to save specific taxes. Today, I'm going to talk about 2 of the trusts: the Business Trust to save federal and state income taxes, and the Beneficial Trust to stop paying taxes on all investments. The other 3 trusts, so you have them. There's a charitable trust if you want to be a 501c3 company. Several of my clients have started their own charities. Good for them to give back to their community. There's the Mineral Rights Trust. I've only sold one of those. One of my Beneficial Trust clients inherited his granddad's horse farm in Oklahoma. On the horse farm, there are 6 functioning oil wells. The revenue he's gained from the oil wells go through the Mineral Rights Trail. So oil rights, shale rights, or coal rights. And then the final trust is a blind senior trust for anyone over 65 who's incapacitated. Maybe they have dementia or they have had a stroke. This is to stop the 3-year look back when they're trying to get into assisted living or a memory place. But again, we're going to only talk about 2 of the trusts today. So let me share my screen. Dun, 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 dun. So the Spendthrift Trust will save you federal and state income taxes. Keep your information 100% private, and if you're sued, you'll have no judgments against you. Let's go to the next page. Now, this is 2026 federal income taxes. Most people are unaware there's 4 ways to file your taxes. The most expensive way is single. Then it's head of household. You're divorced with children 18 or younger in your household. Then married filing separately, and the cheapest way is married filing jointly. Please pay attention. Married filing separately matches single all the way up to the 35% tax bracket. Quietly, on January 1st of 2025, the IRS changed married filing separately to match single. If you learn nothing else from this presentation and you're married, please file jointly. You're going to save double the amount in taxes. Look, $105,701 versus $211,401. That's just a given. My personal story, so you have it. On April 4th of 2020, my CPA called me to say congratulations. I'm a real estate investor. In 2019, I wholesaled 7 bank-owned properties nationwide, paid off all my debt, and had $50,000 in my bank account for taxes. COVID struck. We were using banks and we were using courthouses, and everything shut down. He calls me on April 4th to say congratulations. I had made so much money in 2019. My tax bracket went from 22% to 24%, and all of a sudden I owed $90,000 in taxes. I told him I had only $50,000 saved. His solution was set up an appointment with him, get on a payment plan, pay interest and penalties. And my solution's like, I'm going to research how the rich save taxes. So in September of 2020, I started both my business and beneficial spendthrift trusts. The gentleman who sold them to me, I became his affiliate, and I started teaching in my real estate group how to stop paying taxes on any profits. Unfortunately, he unexpectedly passed away. His appendix died of appendicitis. The law firm that I work for, that was started by Paul Benson 78 years ago, not a single trust has ever been audited. Now his grandson and great grandson run the law firm, and they will give you a certification when you start the trust so that if you get questioned by the IRS, they'll defend you free of charge. They called me 2 days after I found out one had passed away, and they offered me an affiliate program because I had sold 14 trusts in my real estate group. Now, the Spendthrift Trust, if your CPA or financial advisor says, ooh, the IRS wrote a memo, yes, they did, on August 9th of 2023, where they literally said, it's 15 pages long, so if your CPA or your financial advisor says you need to read this, ask them for the whole 15 pages, because on each and every single page, at the bottom it says in bold letters, this is not tax information. But the IRS literally says they do not like Tax Code 643B. They do not like the Irrevocable, Complex, Discretionary, Non-Grantor Spendthrift Trust. It's their opinion. They can't change the tax code. Only Congress can change the tax code. Too many presidents, too many senators, too many congresspeople, and their constituents in their who donate all the money know about the Spendthrift Trust. Now let's go over these 5 elements because you need to have them in every single Spendthrift Trust. Irrevocable. This goes from generation to generation. The Rockefellers Spendthrift Trust is called the Office. It's over 7 generations old and has 400 people under the same EIN or employee identification number. Each individual family files a separate 1041 tax return. The money is not commingled. How I found out about the Spendthrift Trust, a gentleman in my real estate group, one of the instructors, Garrett Gunderson, wrote a book called What the Rockefellers Do. The title's now called What the Billionaires Do. But if you need a PDF copy of that, the Rockefellers use the Spendthrift Trust plus insurance to keep the money in the family. I don't do the insurance, but I have people I work with who can do the insurance. Complex. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade, century to century. 97% of the trusts sold in the United States are what my mom and dad had and what Susie Orman talks about on PBS television, the family trust or the living trust. There's nothing wrong with the family trust or the living trust. It avoids probate and then it dissolves and goes away. It's revocable. It only goes for 1 generation. What I'm talking about here is not what your mom and dad have. This is what the Rockefellers, the DuPonts, the Carnegies, and the Kennedys started in February of 1913 when our tax code started, and our current president's father started this trust back in 1972 when Frank and Donald Trump got sued by the city of New York. So complex, it can hold money. Discretionary. Whoever is the trustee or trustees can make the rules for all the beneficiaries. They can decide how much money goes to a beneficiary or if money goes to a beneficiary. They can do this while they're alive and also from the grave. There's no infighting, there's no contesting the will or anything else. One of my clients, a husband and wife with 4 apartment buildings in Los Angeles, their daughter has a problem. She has a slight drug problem. They're allowing her to live rent-free in an apartment. She actually sued her parents in federal court. The judge read over the entire trust, and he told her she had 2 options. Option A, move out, start paying your own rent. Option B, stay rent-free and pass the drug tests. I do not want to be invited to their Thanksgiving dinner. Non-Grantor. This makes the trust 100% private. When you start the Spendthrift Trust, you are going to have someone who will never be a beneficiary and who will never be a trustee in your trust sign up to be the grantor or the settler. This is not a speed bump, but you will need their social security number. I personally have done this for several of my clients. It's no big deal. There's you sign up as a grantor, and then sign yourself away as you're no longer the grantor. I personally used a family friend who had known me since before I was born. Roy was 97 years old when I started the trust. He now has passed away. So if someone researched either my business or my Beneficial Spendthrift Trust, the only thing they'll know is it's based in Texas and that Roy was the grantor. Spendthrift. This is very super important. This was started in front of the U.S. Supreme Court on two separate occasions and won both times. If you need to get all the laws, case studies, let me know because I do have 2 pages of case law that I can show you and you can research this to your heart's content. Now, the business owner. This is going to save you federal and state income taxes. This is a Rhode Island franchisee owner who saw a TikTok video. He knew in 2025 he had made over $985,000 with the franchise. He wanted to know, he files married, and he wanted to know how much he could save. I took him out to a free website called NerdWallet. Federal taxes, he's going to save $286,614. And on top of that, Rhode Island state income taxes is an additional $59,001. So for the full year of 2026, he contacted me on January 3rd because he was concerned. He's going to save $345,650. With this money that he saves, the thing that he starts, we are going to get him a new EIN, employee identification number, and a letter to the bank. He opened up a new bank account. All his receivables go into that new bank account. He pays his employees and employee taxes and everything else out of that bank account. When he goes to file his 2026 taxes, he's going to file a 1041 tax return with a CPA that we have vetted for him. Again, it's his decision if he uses the CPA we introduced him to or his own CPA in Rhode Island. He's already decided. My CPA never told me this. And then he's going to save this money. He has access to this money because when he opened up his new bank account, he gets a debit card and he can pay for his mortgage. He could pay for his electricity. He could pay for his garbage pickup, his gas. He could pay, he'll have to go to the DMV, change the title of the cars from his and his wife's names into the trust name. It pays for his car insurance, pays for his gas, fixing the windshield if it gets broken. But he gets to save all this money year after year after year. Now, just to let you know, he and his wife are both in their 50s. They don't plan to keep the franchise for many years. When they go to plan to sell it, then he'll need the Beneficial Spendthrift Trust to save the long-term capital gains that are either 15 or 20%. He's just like, you keep saving me over $345,000 a year, I will contact you when we plan to sell it. It's an amazing document. Again, my personal story, my mom and dad drove from Goodyear, Arizona in October of 2018 to Charlotte for my oldest nephew's wedding. I couldn't get the time off because I was working as a Medicare broker. The wedding was October 27th, 2018. If you know anything about Medicare, it's open enrollment from October 5th to December 5th. My dad called me Thursday before the wedding to say my mom's in the emergency room. They're not sure what's wrong. She was on a ventilator for 13 months, in a hospital for 15 months. My dad stayed with my brother and sister-in-law in North Carolina, visiting my mom every day. I purposely bought this bank-owned reverse mortgage in Rocky Mount, North Carolina, so I could write it off on my taxes to go visit my mom. I bought it in July of 2020 for $20,000. It didn't go to auction until 13 months later, so it was in an LLC because I didn't start my trust until September of 2020. I moved it into the trust, and when it went to auction on August 28th of 2021, without lifting a hammer, I made $44,326. I'm a very lazy real estate investor. But at 24% tax bracket, because I had the Beneficial Spendthrift Trust, I got to save $10,368. I'll never have to pay back again, and I just put it into more real estate. It's an amazing document. Since having the Beneficial Spendthrift Trust, September of 2020, I've wholesaled 28 properties. I have a crypto bot between Bitcoin and Ethereum that I get paid a tiny bit, 10 cents, 15 cents, 20 cents each time it's traded. It's only supposed to be around for 3 years. It's now in its 4th year. My friend Glenn does my options trading for me. That's short-term capital gains. I have 12 notes. I have 5 seller financing properties. That's interest income taxes. I have 3 rentals, and I now just bought a fourplex rental. That'll be rental income taxes. Now, this is going to show you, if you're an investor, depending on what your tax bracket is, how much you will save with the Spendthrift Trust. Again, at 24% tax bracket, making $50,000, I save $12,000. At $100,000, it would be $24,000. Guess what? I made a whole lot more money in 2019. So short-term capital gains. I don't care if you are wholesaling, you're fix and flipping, you're doing auction houses, tax liens, options trading, you're selling crypto. Even if you bought Bitcoin back in 2017 and you're going to sell it in 2026, it's short-term capital gains. I have people who tell me, no, it's not. I'm like, please research this. And if you are a forex investor, interest income taxes are if you are a passive investor in mutual funds, you're in a REIT, you're doing subject to real estate, the BRRRR strategy, notes like I have, creative financing, seller financing, and forex investors. Forex investors, you get taxed twice. You really need the Beneficial Spendthrift Trust. Dividend income taxes. I don't care if you're in the stock market, you're a day trader, you're a futures trader, you're a commodities trader, or you're living off of dividends. Rental income taxes. If you have short-term rentals, Airbnb or vacation rentals, maybe you have 5, 10, 15, 20, 100 doors. Maybe you're in multifamily real estate, apartment real estate, commercial real estate, or have storage shelters, or doing Airbnb arbitrage. And then finally, it's not on here, but royalties are taxed a little bit less, 7 different layers, but between 10% to 35%. So if you're an actor, an actress, a musician, an author, an artist, you have NFTs, you have copyrights, patents, or intellectual property. Robin Williams, a late great actor who committed suicide, had the Beneficial Spendthrift Trust. Now his 3 adult children pay absolutely no royalties on any of his fantastic work. Now, long term, this was one of my real estate things I did in 2024. It was a North Carolina subject to real estate deal. They were moving from Waxhaw, North Carolina to Raleigh. I'm sorry, to Texas. I just forgot the name. Houston, Texas. They were going to go into corporate housing. They did not pay their mortgage for 18 months during COVID. Instead of having a 30-year mortgage, they had a 32-year mortgage. They worked with a real estate agent who gave them 19 things to change, including redoing the kitchen. The house was 23 years old. The kitchen hadn't been updated. Pulling up all the carpeting and tile, painting the inside and the outside of the house. They had decided they were going to let the house go to foreclosure, and they would just start over in Houston. When the wife got my sticky note, because I had door knocked every house on my list that was in pre-foreclosure, she contacted me. I'm not making fun of them, but they were keeping up with the Joneses. She drove a BMW. He drove a dually truck with the 4 wheels. They had 2 boys, 2 dogs, and she's just like, we can't afford to fix any of this that our real estate agent is wanting us to do. So I told them, have the movers come in, pack you up, move out. I'm going to go the subject to. I'm going to pay for your rent. I'm going to pay for your electricity, pay for your water, and pay your mortgage in the month of June. I'm going to sell this as quickly as possible. You'll have a blip on your credit report, but you won't have a foreclosure, and you will make money for a down payment in Houston. The real estate agent who gave me the list, she did an open house on a Saturday. I let all the neighbors around know I was putting the house on the market $100,000 below ARV, or after repair value. The real estate agent with the list of 19 things, they wanted to be pristine to put it on the market. I gave them a list and how much everything was going to cost. And I said, please come to the open house on Saturday. I paid for the food. My real estate agent made 3%. The agent who came in with the couple who bought the house made 3%. The family who now is in Houston made $50,000. And I got to save $34,800 in interest income taxes on this one house only. It's an amazing thing. Now, long-term capital gains are either 15 or 20% when you sell your business, sell an investment property, or a baseball card. This came from a business broker. He brought me the client that was buying the business for $1.7 million, and then the gentleman who was selling the HVAC business that he and his wife started on the kitchen table for $1.7 million. The broker made an extra $2,000 with my affiliate link because he made $1,000 on the person buying the business and $1,000 on the person selling the business. The husband and wife who were selling the business at 15% got to save $255,000 in capital gains that you didn't have to pay on April 15th of 2024. At 20%, they got to save $340,000. The wife's like, can we use this for our retirement? I'm like, you can do whatever you want with it. It's not going to cause the IRMA surcharge that 3.5 million people are paying on Medicare because you file a 1041 tax return. They were so happy. Now, IRMA, they say 3.5 million seniors are paying an extra surcharge on Medicare. It's called income-related adjustable amount. Every October, the IRS goes back 2 years. So October 2026, the IRS is going to look at 2024 tax return, 1040 tax returns, and the supercomputers are going to add everything together. How much you gain from Social Security? How much you gain from pensions? Are you making any money? Did you do a 401k withdrawal, an IRA withdrawal? Do you have capital gains, interest income taxes, dividend income taxes, rental income taxes, or royalty income taxes? One of my clients, a husband and wife, they saw a YouTube video. I got to save them $72,000 a year on dividend income taxes. He played in the stock market. I happened to ask, are you paying any IRMA surcharges? And the wife said, we're paying over $800 a piece for our IRMA surcharge. This is 2025 data. That they don't have 2026 yet. So depending if you file jointly or if you file separate, everybody on Medicare pays $185 per month to be on Part B Medicare. If you're making more than as single, more than $106,000, or is married more than $212,000, you're going to pay a surcharge. I got to save them an additional $1,200 per month because they started the Beneficial Spendthrift Trust. Now, I know I went over a lot of information here. If you want to set up a 30-minute tax breakthrough session with me, again, I'm going to find out one of the 4 ways you file your taxes, what state you live in, and if you need a business trust or the beneficial trust, or do you need both trusts? Most of my clients have one or the other, but it's www.thetrustisyou.com scheduling. I have a free class on the Great Discovery. You're going to go out to the sallygimmon.com. You're going to, it's going to take you out to the Great Discovery. You're going to register as a free learner, pay nothing, register as free learner, and you're going to get save U.S. taxes legally. A presentation like this, 3 articles from Forbes magazine I did not write, and then 2 pages of case law and examples of clients saving thousands of dollars. I set this up there because you can translate the class into 165 different languages. I have a couple who have 3 dry cleaning places in San Francisco. Their first language is Korean. I don't speak Spanish very well, but they watched the video in Korean. They had their adult son, who speaks English better than I do, on the video with them, on the Zoom with them. The father had all his tax information, and we were able to save them over $82,000 a year in federal and state income taxes because he watched the video on the Great Discovery. Again, my goal is to teach as many U.S. investors, U.S. business owners, U.S. entrepreneurs, U.S. franchisee owners, self-employed, and professionals how they can save taxes year after year, generation after generation. I cannot help W-2 income earners, but Google says 32% of W-2 income earners have a side hustle. I can almost guarantee you your side hustle is going to be in 1099 income. If I can help you save taxes, please set up a free 30-minute tax breakthrough session with me at www.thetrustisyou.com scheduling. This is a secret of the rich. Even our own president as father started this trust. If you want to learn more, I'm here to help. Have a beautiful day and take care.